I'm Credit Union Times Executive Editor Heather Anderson. On July 25th, following the NCUA's monthly board meeting, I spoke with Board Member Michael Fryzel about current issues like the loan participation rule and the CUSO rule. Let's see what he had to say. The NCUA publicly announced LUAs as banking regulators do with their enforcement actions. Shouldn't the NCUA be more transparent in this regard?
That's a good question, Heather, because some states have now passed laws requiring that LUAs are published in those states. And you get some people who say, well, perhaps if they are published, it may cause a run on the credit union. Others will say, but shouldn't members have a right to know if that credit union is not operating properly? I'm starting to think that perhaps maybe they're right, that latter group, in the sense that everyone should know if their financial institution is doing a good job, and everyone should have the choice as to whether or not they want to keep their money there. We have to make sure that the LUAs, however, spell out the problem. If it's not serious, if it's something dealing with something that can be handled very easily, it should state that. If it's a serious problem, then the member should have the opportunity to say, hey, maybe I don't want to stick this out, I'm going to go someplace else. But we try to be as transparent as possible, and perhaps someday we will get to that point.
Sure, and you do already publish financial performance report information on your website, so
yes,
someone could access that as well.
Correct.
Let's talk about the loan participations rule. That dragged on and on and on, and we didn't have anything out of the board on that, and then one day we did. What persuaded you to reach an agreement with Chairman Matz on that?
Out for comment, and we got back some excellent suggestions, and we made changes that some of the industry had recommended, and the changes were good. My greatest concern was to make sure that we had a strong personal guarantee in place. I believe that individuals who take member business loans should personally guarantee them. I believe that if the members of the credit union are good enough to say, hey, we want you to help build or expand your business with our money, but we want to make sure that if for some reason you're unable to do so, we're not out there having to pay for it. We want you to pay back that money. So I'm a proponent of personal guarantees. The provisions in there for that is very strong. Once we got that all hammered out, Chairman Matz and I have a great working relationship. That is the way we do things here. We talk about them, we get things done, and we move them forward.
So you were the one pushing for the personal guarantee?
Yes.
Interesting. That's still a bit opposed by the trades.
It is, and this is interesting because I had a conversation with one of the heads of the trade organization, one of the trade organizations here in Washington, and he said to me, credit unions are losing member business loans because of the personal guarantee. I says, why is that? He said, well, because banks don't require them. It's not in their regulations. It's the bank's choice as to whether or not they take a personal guarantee. And I asked him whether or not he knew of any banks that did not take personal guarantees, because when I was in private practice, I had some businessmen who had some great businesses. They had 10, 20, 30 businesses, and every time we went to the bank for a loan, they had to give a personal guarantee regardless of how many times they paid back a loan. I said, that's just good business practice. So I said, however, if you find me one bank that does not take a personal guarantee, that does not require a personal guarantee for a member business loan, I'll reconsider. That was 6 months ago. I have yet to hear what that bank is.
Let's talk about the CUSO rule. What is the holdup of the NCUA oversight of CUSOs? Are there legal ramifications or any budgetary impacts?
The concern I have about the CUSO rule as it now exists was twofold. One, I did not know if we had the legal authority to go ahead and have this oversight of CUSOs as great as we wanted it, just reporting requirements that we wanted, because we don't have it in the Credit Union Act. And I was concerned about the cost of setting up the program to get this information. We had been told it would be over $1 million to set it up, and to maintain it would cost over $500,000 a year. That's a lot of money. So I said, okay, I got over the legal end of it because, of course, being an attorney, somebody gives me a legal opinion, if I read it, if I understand it, and it goes that way, I can say, yeah, I can support it. So I'm over that hurdle. But now I said to staff, come back to me with lower cost. Find a cheaper way of doing this, and this rule moves. I'm still waiting for that.
Do you think we'll see it by the end of the year?
I can't speculate on that because, again, all I'm waiting for is something to make it plausible to accept fiscally.